The unlikely scenario is going to be number one and number three. But we believe that the likely scenario is that throughout the year, the inflation, the US inflation or the CPI, may maintain at this range. This will be the likely three scenario what will happen to the CPI for the rest of 2023 or the inflation. And number one, that CPI continued to descend to about 2%, and that's what the Fed hope to see and stay there. And then with that scenario, the Fed will likely cut the rate. Or it make a surprise U-turn, and from here at 6.4, the latest number, it start to move up and broke the last year June highest number at 9%, and that's a bad news. But most of the investors, including myself, we do not believe that, or I would say that the unlikely scenario is going to be number one and number three. But we believe that the likely scenario is that throughout the year, the inflation, the US inflation or the CPI, may maintain at this range, maybe between 5, 6, 7, or 8. Now, let me just bring you to the next chart. With this, I think we'll have a better understanding that what do I mean by the CPI or the inflation number is going to maintain in a range. And this was what we saw. And before 1st of March 2021, basically for the whole inflation number of United States, it has been staying at around average about 3% over the last 40 years. But something happened in 1st of April 2021 that you could see that for the first time, it broke above around 3% high and it started to trend up. And it has been coming down, yes, but what we're expecting here is that the CPI likely scenario for the rest of the year will maintain at the range. At the end of the year, it may close at 5, 6, or 7, but it really doesn't matter at what price it closes at, because this is not a prediction that where it's going to close at. But if it's going to close at 6% or even 5%, it is still not good news, because compared to the last 40 years, the average CPI was at well under the average of 3%. It's still almost doubled the inflation of what we used to have. So now, so exactly on this scenario, where is the opportunity and what am I looking at? What are the investors looking at, and what are the traders looking at? And this is our point of discussion here today. But before that, let's take some time to read into the disclaimer down here. So when exactly the inflation start to creep in? Yes, I think a lot of us blame it on the start of pandemic. You are quite right. I think because of that, the whole supply chain got disrupted. But I would say that even the post-pandemic today, the supply chain are kind of in order, but we will be still facing the inflation pressure. I think the other factor is not to forget is the continuous supply or increase of money supply over the last many years. And that caused a dilution in the currency. But we could see across all these commodities, and especially the edible commodities and the black gold or the actual gold you're talking about it. But across all these commodities, I just showcased a few. There's a lot more that, since I would say that where is the best investment since the last 2.5 years or 3 years, by now it is in the commodities, not the stock market. But moving forward, as the inflation continues to keep under pressure, all these commodities, I believe, that will continue to move up. But let's look at what happened when pandemic started in year 2020. Now I'm going to use this feature which I like, where it gives me the percentage, and so far gold has been going up by about 25% since the pandemic started. And then let's look at the crude oil, and that's outstanding, of course, not forgetting that at one point crude oil went down below the par value. Okay, we saw that it is now, compared to its par value, below par values, are up 279%. Now let's look at the soybean oil after the when the pandemic started and up to today is 152%. And that's why the food prices are costing more. That's the reason. Supply chain is one issue, but the other will be the money dilution of currency. And let's look at what happened to the feeder cattle. Yeah, this feeder cattle. Yeah, I'm just going to shift this out. And we're going to take a look at the lean hog as well. It's been out about 132%. Let's look at the corn. I hope you have a better appreciation what happened during this inflation period. And you have to bear in mind that somewhere around this period after 2020, that the US Fed has been saying that inflation is just transitory at a point in time. What's transitory? It means that inflation are just temporary. But I do see at a point in time that not quite the case, but today it became a fact that inflation is not transitory, and the whole world are facing a lot of inflation. Now, let me just finish off the last one, which is rice. And we saw that rice is up by 50%. And that's what we're seeing here is that just not for the long term, but later I'm going to share with you how to manage the short term. Now, basically, how I manage inflation the last 2.5 years and moving forward is that I have two portfolio, and I would really advocate that every investor and traders to have two portfolio. One is for long term and one is for short term. Now, I think for some of you may be following me that since May 2021, if I can remember, that I start advocating that higher inflation to come, and we're going to expect a higher interest rate to come. And that was May 2021. And when I spoke about this topic, I think I might feel is that not many of my listener are in tune with that. That's what I felt, because at the point in time, no, not many of us are feeling the inflation pressure yet. But yet I'll start investing. So on my investment portfolio, what do I invest in? Mainly the commodities, the resource funds. So I invest in mainly three parts: the funds, the ETF, and also the related stocks, the mining stocks or the agriculture stocks. And this is what I have in my portfolio as an investor. But on the trading front is that since I know that general trend is up, now I would like to dabble a little bit about trading as well. I would prefer to buy into dips, because since that the general trend is up, I would prefer to buy into dips. Now this is how I do it. And what we're seeing here is the monthly chart of the feeder cattle. I know feeder cattle may not be very familiar to you, but my intent is to showcase that the trend, the long-term trend of the feeder cattle, followed by a short-term trading opportunity here. And when you have the time, take some time to go through the other commodities like the gold, the oil, the soybean, the rice, etc. You realize that they bear a lot of similarity between the long term and the short term of what I'm going to show you here. Now, let me just first start it off by looking at this feeder cattle, that we could see that this is a chart starting from the 70s to the 80s to current. And I'm just going to draw a very simple trend line. That what could you see here is that general trend of the commodities, the feeder cattle, has been going up. Now, can I say that it is kind of being intended that way? Because when the central bank increased the money supply, they did say that, I believe it started from the 70s, but 80s, 90s, millennium, I read, and you know that they hope to see that the inflation is at 2% every year. Now, so generally what we could see that all commodities has been trending up over this time. But as we move past the 2020 when the pandemic started, I think something have cracked the needle, have kind of pricked the bubble, and I believe that most of the moving forward, the inflation is going to continue to boil, and that's what I'm seeing here. And for my investment portfolio, I'm still going to continue to hold on to my ETF, the funds, and the related stock, and that's what I'm doing right now. But for my trading portfolio is this, and of course trading, we look at the much shorter term perspective. And now looking at a daily chart, of course you can feel free to look at the minutes chart if you want to. Now again, I'm going to draw a very simple basic trend line, and I'm going to draw this trend line. Is almost a perfect line. If you've been following my past video tutorials, I spoke about how to draw an uptrend line, so we could see another classic 3 trough. And now when we trade, I will do both sides. I will sell short, I will buy as well. But since the general trend is up, as a trader, I will try to focus on buy on dips. In the same time, I will sell short as well, but my focus is always buy on dips, because the beauty about buying on dips on the general uptrend is that I can choose to hold it a bit longer. Now let me just introduce another characteristic about trading here, is that if you may not have noticed it yet, but I think most of the market and commodities, there is a typical swing, and as of now the dynamic of this feeder cattle is about $8 to $10 per swing. Now from about here 184 to about 174, that's about $10 swing. From here to here is another $10. From here to here is about $8. From here to here is another $10. And I would like to see that what the system tells me if I've missed out any potential trend. And this is what the system suggested. And I think I'm quite on the dot here that the computer itself or the platform itself suggested that this green line, but I will prefer to use my white. But nevertheless, I think all these are just wonderful features that the system have. And just going to clean this up. To understand more how to trade into the feeder cattle futures, you can always visit the CME website, or you can just Google feeder cattle CME. I've included some of my past video tutorials relating to today's discussion and its links below. Keep watching it again and again. You too can get into the market with greater precision. Always enjoy studying into the correlation between the markets, and I hope today's sharing it will be helpful in how we invest and trade. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.